Welcome back, everyone. We have a special investment lesson 101 for you right now. Our Paynes pro, Matt McCall, going to tell you about 4 stocks you should be considering adding to your portfolio. All right, Matt, let's hear them.
Paynes pro, I like that. Can we put that? Can I get that in my business cards going forward? All right, so the bull market, believe it or not, next month is going to be turning 6 years old. You know, it's been very difficult recently for people to find stocks of what we call value. Still undervalued. They have big upside to go. But keep in mind, it is not too late. There's still a lot of opportunities out there in the market. We talk about it a lot here in the show. A lot of people we bring on the show, they throw around the term value. So we're actually going to break that down for you. One way that Charles and myself look at it is what's called the PEG ratio. Let's take a look at that. It's a metric to determine the relative value of a stock by comparing its price with its earnings per share and expected earnings growth. That's a bit convoluted. What that means in general is you're looking for stocks that are undervalued but also have growth that go along with it. Every sector is a little different. This breaks it down. Any number under 1 is very attractive. So what we did today, we scanned the entire universe of stocks out there. We came up with 4. Out of the thousands, only 4 stocks. We're going to share those with you now because we still believe investors can make a lot of money in this market. So let's take a look at the first stock. Alaska Airline, PEG ratio of 0.61, very low, below the 1.0 we're looking for. This is what I love about this company. Lowest complaint rate of 12 major airlines. Trust me, there's still a lot of complaints, but not as many as the other airlines. Over the next 5 years, they're expected to grow earnings by about 20% annually. Very high growth for a low-value stock. And again, forward PE ratio below 10, well below where the market's trading right now. Next stock we're going to take a look at. HD Supply Holdings, symbol HDS. PEG ratio very similar, 0.62. This was spun off from Home Depot a couple of years ago. This is non-residential construction, so not your homes. They sell to the big guys. Gaining market share, that's always important. Charles talks about that a lot. You want to own a stock that's increasing their market share. And how about this? The big guys own this stock. Bain Capital, 13.5%, and Jana Partners, 8% of that. So the big money's already in this stock. Much more to go in the upside. Third company, Lithium Motors. PEG ratio 0.8, symbol LAD. Auto dealer, both new and used vehicles in 100 different stores, 28 brands. So you don't have to buy the actual auto company, you're buying the brands. Lower gas, higher wages, low interest rates. Why would you not go out and buy a new car? PEG ratio, again, below where the market's trading right now. Finally, number 4. This might be my favorite one. I just heard of this stock today. Endurance International Group, PEG ratio 0.94. We have to always talk about the cloud, small business, entrepreneurship. This is it. Earnings expected to grow about 25% over the next 2 years. This is entrepreneurship. This is where you want to be. So, Deirdre, I gave you 4 stocks, undervalued, and you're smiling right now.
With PEG ratios, I'm just so impressed. So, Dani, you're evaluating lots of stocks as well. What do you make of Mac's picks?
I liked a few of them, actually, but I like this Lithium Motors because, you know, the auto space across the board has been doing very, very well for a lot of reasons, most especially oil prices coming down, gasoline prices coming down. These guys are the 8th largest in the United States, and I really think that, you know, the earnings are coming out on the 25th. And I think they're probably going to be.
The autos on the road right now, oldest age they've ever been.
Right.
So people are going to be forced. I mean, obviously the autos are better, so they last longer, but still they're going to be forced to go out there and do that. And if you see a tick up in wages, low gases, what are you going to do? Buy a new car. Not buy a new house, most likely, but buy a new car.
All right. So with this battery theme, it seems like you would like that based on what you were talking about with the Apple story.
Yeah, I think the autos are an interesting space. A lot of appreciation in the sector over the last 6 months to a year, so you want to be a little bit careful, but that certainly looks like an interesting play.
I think it's for you. You're the value guy.
I know. No, thank you. But
HD Supply, PEG ratios, for God's sakes.
Great play on the real estate market, on the expansion and the growing U.S. economy, which is improving. You've got a business that is not nearly as cyclical as the other home builders there, because this is an industrial space, this is commercial space, takes a lot longer to build, a lot more planning, a lot more capital involved. So it's a great play. And at those values, we're going to be looking at it on our team at Bruderman next week.
All right, listen to that. Maybe he owes you a little commission here for the research. Just saying. Just saying. All right. We have a